Hi, I'm Jim Juback, and welcome back to my YouTube channel for JubackPicks.com, JubackAM.com, sometimes known as JubackAssetManagement.com, and my new Substack, Economics for Investors. I put these videos on hiatus for a while I worked on that Substack. That Substack is now up, and what I'm trying to do with the new Substack is focus on economic trends, statistics, economic thinking, long-term economic theories that really drive the economy. If you look under the hood of the economy, these are the stuff that makes the engine go. And over the long term, they're more important, I would argue, than short-term news stories. So if you want to check it out, it's free to read part of it, the usual internet thing with the paywalls and all that. Subscription is $7 a month, and you can find it at economicsforinvestors.substack.com. Okay, today's topic, today being June 4th, is a quick pick, and we're looking at the question of how bad are things really down on the farm? And the answer is, unfortunately, really bad. Really bad. That crop farmers lost. Crop farmers is distinguished from dairy farmers, poultry farmers, people who grow corn. They'd lost $35 billion in 2025. This is in the red deeply. As you might expect, bankruptcies are up. They were already up, though. They're up 55% year over year in 2024, 46% in 2025. And rather than things getting better, they seem to be getting worse, so that they're in the first 5 months of 2026, they're up 70% from the 5-month period in 2025. The reasons for this are pretty simple. U.S. tariff policy has shut down a lot of export markets. China's not buying soybeans, for example. Canada is not buying the stuff they used to buy. So incomes are down. Input costs are up. Everything from diesel fuel to fertilizer. And the reason for this is not very hard to find. It's the war in Iran and the closure of the Gulf, the Strait of Hormuz, so that supplies are simply not going through there. And maybe you didn't realize, and I certainly didn't before I looked at this, how much petrochemical stuff comes through there, fertilizers, for example. So we're looking at a 47% increase in the cost of some fertilizers. All this is really bad news for farmers, farm families, farm economies, farm towns. If you're an investor, this is not a time to be buying agricultural equipment stocks. One of my favorites there is Deere, D-E. I've owned that in my long-term 50 stocks portfolio since December of 2008. That's about 1,340 some percent in that period. If you want to hold it, I would hold through this. I've held Deere through cycles. If you want to add more, which is what I tend to do, add more down cycle. This is not yet the bottom for the cycle. We were looking at maybe the bottom of the cycle being 2026, last part of the year. I think we can now push that off and say 2027. I would wait a little bit before buying more, but then go ahead and do that. You can track these portfolios on JubackPicks.com or JubackAM. If you want those two sites, you can read more about that on those two sites as well as on Economics for Investors. So thanks for watching. Hope to see you as a subscriber. Ciao.